Alrighty, guys, we are live. So every day I read a page out of this book right here, which hopefully it'll focus and you guys can see. But this is the Tao of Warren Buffett. And essentially what this book is, you can see it's not very big, and you've probably heard me talk about it before, but essentially this book is just a collection of quotes from the man himself. And if we flip open to a page, you guys can see that there's the quote at the top. It's not going to focus, but you've got a quote at the top of each page, and then there's an explanation below it that kind of breaks down the quote, maybe explains it in a little bit more depth. And what I was reading today, the quote that I read really resonated with me. I'll actually put it up on the screen here. So the quote from today was, "When management with a reputation for brilliance tackles a business with a reputation for poor fundamental economics, it is the reputation of the business that remains intact." Now, interestingly enough, actually, truth be told, the explanation of the quote, which we'll show that in a little bit, but the explanation of the quote, the more detail, is what jumped out to me more so than the quote itself, I would say. But the explanation touched on some qualities that separate awesome businesses, or great businesses as it's referred to in the book, from awful businesses or mediocre businesses. So in tonight's live stream, we're going to talk a little bit more about this thought. What separates the awesome businesses from the awful businesses as defined, I guess, by Warren Buffett. But before we get into all of that, guys, welcome to another Dividend Happy Hour. We got to kick it off the only way we know how, with a quick cheers. And let me just open my drink here real quick. Hold on, you guys hear this? Yeah, love that. So cheers, guys. Here's to the yield, here's to the growth, and here's to that sweet, sweet cash flow. I hope you guys had a fantastic week of dividends, a fantastic week on the market. I know I did, but here's to that, and here's to you guys as well. So cheers. Really good stuff. So tonight, guys, I'm sipping. It's not alcoholic or anything. It's just a seltzer. It's called a Polar Seltzer. The flavor is pineapple guava. I'm really not a big seltzer guy. You guys have probably heard me talk about that before. You know, I'm much more so a margarita fan, but you know, I was trying to keep it. I had a couple margs last night. I'm not gonna lie, and so tonight I'm trying to keep it tame, trying to keep it low key. So I grabbed the seltzer. I wanted something a little bit different than water, so this is what I'm sipping on tonight. But anyway, guys, let me know a few things here in the live chat. Number one, what are you sipping on tonight for the Dividend Happy Hour? Okay, let me know what you're drinking. Number two, what did you buy this week? Which stocks did you pick up? What did you add to your portfolio? I'm curious to know. And also, number three, guys, did you guys hit any cool milestones this week? Anything crazy happen in your portfolio? Any portfolio value milestones? Maybe you hit your first $5,000 in the portfolio, first $10,000, first $100,000 perhaps. You know, any dividend income milestones? Maybe you are officially at 3 figures a month on average. Maybe you just crossed that $1,000 per year annual dividend income mark. What's going on in your portfolio? Anything cool that we can share here with the community? And as you guys are typing your answers there, I want to just scroll up here and say what's going on to everyone here. We've got JC in the building, Anthony, who finally made a live stream. Anthony, good to see you here, man. We also have Anthony T. We got Anthony L and Anthony T. So good to see both you guys here. We got the one and only Zal in the building, who usually works Friday nights, but he is gracing us with his presence, which I'm so fortunate for. Thank you for coming, Zal. We got Phil here. We've got Rick, G-Man, of course. We've got Dean, Paolo, Charles, Fast Eddie, Tommy, Shamir, Amadou. What's going on? Chris is here. Pizza is here. Good to see you, Pizza. Greg's here. Yeah, Greg says, if he says there's more than one way to skin a cat, we all take a shot. Let's see, at least in terms of like what we're talking about with the main event, I don't have any, you know, cat skinning planned, but hey, sometimes that's just where the night goes, or sometimes you can't predict where the night goes, I should say. You know, there's always the possibility that we're gonna be talking about skinning cats. Just don't tell Peanut, who I think has already run for the hills just in anticipation. But anyway, moving on, we've got, I'm not sure how to pronounce this, a Silurp. That's what we're going with. Hello to you. Shamir, did I already say what's up to Shamir? I don't know if I did, but if I didn't, Shamir, what's going on, man? Dominique, good to see you. We've got Dennis. We've got Leif, who I just sent an email to. Leif, thank you for the email. TCAF, we got Deslock, Jim. Good to see you, Jim. I feel like I haven't seen you for a little bit, but I am happy to see you tonight in the live stream, and I hope you're doing well. MJ's here. Anthony, Ghost of Toby. We don't have Toby. We just have his ghost, which is a considerable stand-in. We'll take it. Let's see who here. Luca, Kyle. Did I say what's up to Rick? I don't know. Rick, what's going on? Dr. Nubenstein, drinking some water. And then with that in mind, actually, just talking about water and drinking and stuff like that, let me see what you guys are sipping on and what you bought this week. So Shamir's drinking a Coke Zero, which is his regular, I've learned. Bought some at the S&P 500, some Altria Group, and some BTI. Okay. Anthony bought some SCHD and Jeppy. Pretty solid combination. Let's see. Paolo keeping it clean as well. Good stuff, Paolo. Goes to Toby. I got a 6-pack of Bud Light. Cheers. I should have worn my Black Flag shirt. I got a 6-pack and nothing to do. I got a 6-pack and I don't need you. If you guys don't know the reference, I'm sorry. Just ignore me. Let's see here. Zal's been guzzling down water all evening, trying to stay hydrated. Almost a gallon down just in these past 4 hours. Good for you, man. It's good to stay hydrated. Good for you. A gallon, guys. A gallon is a good kind of rule of thumb to shoot for. A gallon of water a day is a really, really solid amount. And real quick, I don't know if you guys can hear that. Probably not, because this mic's pretty solid. But in the background, guys, there is just some crazy weather going on here in Las Vegas tonight. It's been on and off, like rain all day. Super crazy thunder going on right now. We'll probably get some light. Well, where there's thunder, there's lightning, obviously. Oh yeah, I can really hear the rain coming down now. But I don't know if you guys have been keeping up with this whole Hurricane Hillary thing that's been happening. But there's supposed to be some pretty insane weather coming to the southwest of the United States here in the next couple days. It's supposed to be pretty hard on Southern California, Southern Nevada, probably parts of Arizona. And I actually think it's even supposed to move north into Nevada, like head towards Reno. But it's supposed to be pretty bad. And yeah, we'll see what happens. Hopefully nothing too crazy. But, excuse me, it'll be interesting. But anyway, let's keep going. Tommy picked up some SHD ADC, which is, that's Agree Realty, right? ADC. I know I just talked about ADC. I think it's Agree Realty and Realty Income. Anthony picked up some SHD, Realty Income, Vici. Nice little shopping spree here, it looks like. And drinking some H2O because I'm on the road to visit family for the weekend. Okay, tell your family I said what's up. Actually, tell your family on behalf of the whole dividend investing community hello. I'm sure they'll want to hear from us. Lucas sipping on some apple juice. Hopefully it's Martinelli's. Kyle's got some root beer. Good stuff. Man, I couldn't tell you the last time I had root beer, but I love root beer. Chris always comes prepared with an energy drink. Sometimes two. This guy's a madman. And I think, Chris, you're on East Coast time or at least Central time, so you're at least a couple hours ahead of me. So it's like 7 p.m., maybe 8 p.m. where you're at. And he told me, guys, the energy drinks late at night don't faze him one bit. This guy's a madman. A madman. Let's see. Rick just water for me after the gym. Good for you for getting that workout in, Rick. Tell me about your workout, Rick. What did you hit today? And then picked up some Pfizer and some Main Street Capital Corporation. Dr. Nubenstein stuck at work. Let's pray for him, guys. Dr. Nubenstein, hope you survive the shift, my friend. But thank you for tuning in with us. Hopefully this makes the time go by a little bit easier for you. Let's see here. Oh, this is cool. So Anthony got his coffee. The Mr. Brewer, good stuff. Big milestone. I've raised over $600 towards my local hospital. That's awesome. So in case you guys don't know, and Anthony, I apologize if I butchered this, but Anthony has this business here, the Mr. Brewer, where a certain percentage of the proceeds, I don't know how many, but a certain percentage of the proceeds of the business go towards, as he says here, his local hospitals. So good stuff, Anthony. Keep it up. Let's see here. Dean's sipping on a little Miller Lite, bought some RTX. G-Man, water, and Altria, unbeatable combination. Jim here, coffee. Man, you guys are staying caffeinated late in the day. Wow. MFC initiated a position in MFC. I can't say that I'm familiar with that one off the top of my head, but good stuff, Jim. Luca bought some Pfizer, Pepsi, Altria, British American Tobacco, and Realty Income. Okay, so we're seeing some trends here, guys. There's a lot of Altria Group, a lot of Realty Income, which is no surprise because I think they're maybe $57-ish a share right now. So no surprise. Pfizer, I feel like I've seen a lot. We already say Altria and BTI, but I feel like I've seen those few quite a bit. But anyway, guys, we're going to keep scrolling down here. Let's see. Say what's up to my man Kevin Burgess, sipping on a Mike's Hard, I believe, and picked up some Hess Midstream and Altria Group. I saw you guys talking a little bit about Hess in the Discord group today, so good stuff, Kevin. Let's see here. Oh, this is good. So Kryptonian started a position with Kroger, really solid dividend growth stock, and Coca-Cola for very long term. Okay, love it. Let's see. And then Pizza had a cool little milestone here. And just so you guys know, too, Pizza, I don't know, remember your exact age, but he's in the teens. He's not 18 yet. He might be 16, maybe 15. Maybe it's 15, but either way, Pizza is a young gun, and he's getting started early on his dividend investing journey. He's starting where many of us would have, like if we could go back in time, like we would be starting at his age. So Pizza, proud of you, man. Finally got to $10 a year from dividends. We all got to start somewhere. That's right, man. I mean, you know, by the time you're my age, by the time you're 30, it's like that $10 is going to be probably like a pretty unfathomable amount. So keep up the good work. Let's see here. Let's keep going. Oh, we got Mitchell here, first timer drinking a Captain and Pepsi. Good for you. Cheers. Happy to see you in here for the dividend happy hour. And let's keep going here. Maybe one or two more guys, and we'll get into the main event. Let's see. I'm way behind in the chat right now. Man, a lot of people in here. Good stuff. A lot of people commenting as well. Oh, we got my man Russ here. Good to see you, Russ. We were just texting. Drinking an Aldi Blackberry Belvie. And bought some Nexstar Media SCHD in Realty Income. Okay, can we do it with both eyebrows? No, just one or the other. Not both. I'll work on that and get back to you guys. Yeah, rain in Vegas, crazy. So let's keep going here. Anything else interesting before we get into the main events? Charles says, Ryan, can you do subtitles on live? I doubt it because it's live and it would need time to process the subtitles. But if you go watch the replay, I guarantee you could watch it with subtitles. So this is awesome. So Anthony says, yeah, it's at the point that my sister and parents know Friday from 8 to 9 p.m. do not call. That's hilarious. That's awesome, man. Okay, let's keep going. Pizza's 13 years old. Okay, so for Pizza, sorry. Pizza is starting dividend investing at 13 years old, guys. I think that deserves a little round of applause. So good stuff, my friend. Okay. And I see some comments about MPW too. Maybe after we get through the main event, we'll talk about some MPW. Which, for the record, I've kind of kept up on today's news, but we could talk about it some more later. But anyway, guys, in case you're just now joining, and I know you saw the title, it's basically, you know, what separates an awesome business from an awful business. And in case you missed the beginning of the live stream here, every morning I read a page, or every day I read a page out of this book right here, which is The Tao of Warren Buffett. Hopefully it'll focus. Yeah, hopefully you guys can see that. But and I'm going to hide the comments for now. And I also left a link to the book in the description of the video. This is a really good one to pick up. I think it's a must-have in any investor's portfolio, especially if you just read it. Just read a page a day. It takes maybe 3 minutes, and just as an investor, kind of just a good way to start your day, I'd say. But anyway, every single day I read a page out of this book. Page is basically a chapter. And each page is a quote from the man himself, like this one here. This was today's. And it really struck a chord with me. When management with a reputation for brilliance tackles a business with a reputation for poor fundamental economics, it is the reputation of the business that remains intact. Now, I said it earlier. I mean, if you guys were here since the very beginning, I'm sorry because I'm repeating myself, but good quote. It wasn't so much that quote specifically for me that did it and really stuck out to me. It was actually the explanation of the quote. And on every page, they go into more detail. And this is what is written beneath the quote. And it says, these are great businesses with great underlying economics that have the financial wherewithal to turn themselves around when they get into trouble. And there are mediocre businesses with poor underlying economics that are impossible to save regardless of the brilliance of managers. So pausing right there for a moment, if you've got a business with poor economics but a really good management team, typically the management team's not going to make a difference. At the end of the day, those underlying business economics are still going to be pretty poor. Now, the inverse of that, we've heard Warren say, is true as well. If you've got a fantastic business, great fundamental economics, great financials, just an all-around good business, you've got a cruddy management team, typically, the business will still be intact even despite the management team. So there's kind of that inverse relationship between the two. But anyway, moving on. A great business. So right now we've already talked about mediocre businesses. A great business is usually awash in cash. Okay, these are some qualities of great businesses, and this is what really stuck out to me. A great business is usually awash in cash, number one. Number two, carries little or no debt and is in a great position to either buy its way out of trouble or ride out any downturn in the economy. Okay, so we've got three things there. Now, mediocre businesses, on the other hand, are always struggling for cash and are loaded with debt. And if they get into problems, they usually have to rob Peter to pay Paul, which leads to even more problems. No matter how brilliantly a mediocre business is run, its poor inherent economics will keep it forever anchored to poor results. Now, starting here with great businesses, and in the title I used awesome versus awful. It just kind of rolled off the tongue better, right? But they use great and mediocre, different names for the same thing. Now, in terms of awesome businesses or great businesses, here are the three qualities just reiterated. They have plenty of cash, they have little to no debt, and they are financially fortified, to put it simply. But they said here, in a great position to either buy its way out of trouble or ride out any downturn in the economy. So if times get tough, they're financially fortified. They can withstand it. Okay. Let me look at my notes real quick. I didn't want to get too ahead of myself. Okay. So with all of that said, guys, going back here, question for you guys. Based on this description, based on these three things, and if we go back once again, plenty of cash, little to no debt, financial I almost said fornication. Fortification is the word. Oh, gosh, guys. What are we going to do with me? Based on these three things, which awesome businesses come to mind? Are there any that you can think of just based on this description? I mean, you look at these three things, what's the first business that comes to mind? Okay, let me know that in the live chat, or let me know in the comments below if you're watching the replay. I've got one in mind that we're going to talk about, but I want to see what your guys' take is. I want to see which ones you guys come up with. Yeah. I want to see which ones you guys come up with. We've got Daniel here that says Broadcom. Okay. JR says Visa. Dominique says Apple. Zal is making fun of me. Not making fun of me necessarily, but D says Texas Roadhouse. That's a great one. That was one that came to mind for me as well. Actually, a lot of these are ones that came to mind as well. Before, when I was taking my notes, I listed out all the ones that came to mind, and ones like Visa, MasterCard, Texas Roadhouse, Apple as well. These are ones that jumped out to me. Let's keep going. I see Microsoft, Apple, Google. Lucas says Starbucks, Visa, MasterCard once again, Texas Instruments, GGG, which Greco, is that what it is, Kevin? This is a new stock that Kevin, ex-Dividend Dad, and my man Suzuki Man in the Discord group we're talking about. Kevin actually put a really good video out on his channel discussing this in greater detail, so I highly recommend you guys check it out. Microsoft. Pizza says Lowe's. Zal, Visa, MasterCard, Costco. Yeah, that was another one. S&P Global. MSCI, I know the ticker symbol. I don't remember it off the top of my head. Same thing with MCO. It's not... The company name is not coming to mind. MJ, Coca-Cola and Visa, Microsoft. Yeah, Jack says GameStop. Russ, Apple. Shield, CCI. Well, they've got some debt, but it just comes with the territory. They're a real estate investment trust. Google, Apple. We're seeing a lot of the same ones now. Adam says SCHT. Not really, because it's an ETF. So kind of different rules, but a lot of good ones here. So Berkshire, yep. FICO, Hawaiian Electric, Rob says. Christopher thinks Realty Income and SCHD. Once again, not necessarily, because, Realty Income has debt. They are financially fortified, and I don't know what their cash situation is like, but the debt just comes with the territory. But anyway, guys, so these are all great options. MSCI is the duopoly with SPGI. So these are all great options, okay? The one that really jumped out to me is, in addition to a lot of the ones that you guys said, and I'm actually surprised no one else said this one as well, is, let me actually go, hold on, I need to pull it up. 1 second. Any guesses as to which one I'm going to pull up? You guys Any idea which one I'm going to put on the screen right now? I bet one of you guys will be able to get it. No, not KRC. That's a good guess, though. It's in my portfolio, so you're on the right track. JP Morgan would be another good one as well. One of you guys is going to get it. Yeah, there we go. Adam, my friend Adam got it. Williams-Sonoma, okay? So Williams-Sonoma was one that came to mind for me. Let's actually go over here, okay? Right here, ticker symbol WSM, which is the most recent addition to my portfolio. And to me, it checks all of these boxes, these 3 boxes. And in fact, I do think these kind of go hand in hand. I think if you have little to no debt, it's much easier to keep plenty of cash because you don't have to spend cash or cash flow to pay down debt. And it also helps you be financially fortified. If you don't have any debt, you have no debts to pay. I mean, that's such a huge financial burden off of that company's shoulders. So it's much easier to stay fortified. So I think little to no debt is definitely a requisite for that. One of the biggest ones. And Williams-Sonoma has no debt on the balance sheet, which let's actually go over here, take a look. I'll show you. So if you guys have never looked at this one, we'll look at the cash real quick. So cash, it's okay. About $300 million in cash. But the debt, if we go down here, it says there's some total debt, net debt, but I think that might be just leases or something like that, capital leases, yeah, right here. But if we look, long-term debt doesn't have any, hasn't had any since 2019, actually. If we look at short-term debt, let's see, current liabilities, current portion of long-term debt, yeah, no current debt. So Williams-Sonoma has no debt on their balance sheet, which is one of the big reasons I've been pretty hyped on this company. It just feels good. Just feels good to invest in companies where no debt, they can't go bankrupt if they don't have debt, so they're in a much better financial position than some other companies that we'll actually be talking about later in the stream. And I've actually been buying, like I said, this is the most recent addition to my portfolio, and I've been buying Williams-Sonoma quite aggressively since I started the position, and showing you that just real quick. I started the position back in June 13th, started with 2 shares, and pretty much every single week or every other week I picked up 1 share at least. But then beginning in August, guys, I've been really hitting it hard. Bought 5 shares on the first day of August, 1 share a week later, another share a week after that, and then I bought 3 shares actually yesterday at 133. And just where it's currently sitting in terms of share price, if we go back over here, I think it's, let's see, if we scroll up, it'll show us 134.42. And my position's about breaking even, and I'll actually show you my position real quick. So at this point, I have exactly 18 shares of Williams-Sonoma, like I said, about breaking even. And right now, because I've been buying pretty aggressively, it's starting to get up there, guys. It's as far as its position in my portfolio, it's 5% of the total portfolio, and it's bringing in about $65 of annual dividend income. So I've been building it pretty quickly. But anyway, this was one of the businesses that really jumped out to me as one that checked those 3 boxes as an awesome business. Now, going back to the explanation, let's look at some mediocre businesses now, okay? So just reiterating this, a mediocre business is pretty much the opposite. It's always struggling for cash, always loaded with debt, and if they get into problems, they usually have to rob Peter to pay Paul. Or in other words, they might have to take on more debt to get out of their problems. If they have a lot of debt, they don't have the cash to solve their problems. They might have to take out even more debt to get squared away. Now let's go back over here. Okay, so just to reiterate, strapped for cash, loaded with debt, financially vulnerable, not fortified, vulnerable, which is where you do not want to be. Now, I want to put the same question back on you guys. When you look at these 3 things, strapped for cash, loaded with debt, financially vulnerable, what's the first company that comes to mind? Which one jumps out at you first? Give me some options here. I already know that the 2 most common ones you guys are going to say. I already know. Okay, yeah, Shamir, right off the bat. AT&T and Verizon, I knew that one was going to come. Okay. AMC, MPW, sure, for sure. MPW is the definition of a bad business. PayPal, haven't looked into that one, so I don't know. AMC, TTCFQ, Dan, any telecom company. Yeah, I knew that the telecoms were going to come in here. Warner Brothers, GameStop, Verizon, yep. Yeah, it's AGNC, Disney, Zim. Okay. MPW again. Yeah, so all really good examples. Once again, I want to share with you one in particular that came to mind for me. Now, you guys keep submitting answers if you have them. I'm just going to make sure I'm in the right spots here. Go back to my notes. Okay. So I don't think you guys are going to guess the one that I'm about to put up on the screen. This is I don't remember the market cap of it. I think it's a small cap company, maybe a mid cap company. It's one that's talked about here and there in the dividend investing community. Sorry, I'm just reading the comments. It's one that's talked about here and there in the dividend investing community, but not too much. Maybe recently, because there's been some recent news about this company. But the one that I had in mind is this one right here, Camping World Holdings, Inc. And we'll look at a few things with Camping World, but we can see they have a negative debt to free cash flow, which means that they have had negative free cash flow in the trailing 12 months, which we're going to look at. But looking at the cash to debt, guys, so starting with the debt, $3.65 billion in debt, which, if we just scroll up and down the screen, we see companies with a lot more debt than that. But it's all relative, right? This $3.65 billion of debt is a lot for this company, and they only have about $54.5 million of cash on the balance sheet. So, that doesn't look too good, especially when you compare to something like let's see, what's a good example? If we go, and I don't want to look at REITs here, but let's do this right here. So there's some other companies on this page right here, like JP Morgan, for example, $746 billion in debt, but they have $1.43 trillion of cash on hand. So they have negative net debt. Same thing with Bank of America, $850 billion of cash on hand, $680 billion in debt. Believe it or not, Citigroup, same thing. Banks kind of play by a different rule. Now, Ford's an interesting one. Ford says about $30 billion of cash on hand, but $145 billion in debt. Now, there's a little bit more to this story. We're not going to get into it, but a lot of this is actually just Ford financing that is held as a liability on their balance sheet. So when they loan money out to people who buy their cars, that's part of this debt right here. Apple, that's another good example. I mean, Apple's got some total debt here, it looks like. But still, $62.5 billion of cash, $110 billion of debt. They could pay off over half of their debt tomorrow if they needed to. But anyway, going to Camping World, let's go. CWH. We're going to go over to the balance sheet real quick. So once again, just reiterating, total debt right here, we're looking at $3.6 billion. And look at this trend too for the total debt. I'm on the screen, right? Yeah. Look at this trend too for total debt. Okay, this is going up and up and up over time, which isn't necessarily a bad thing. This is common with some companies, especially real estate investment trusts. But the important thing is to see, can the companies service this debt? Are they generating enough free cash flow to stay on top of this debt? And it actually looks like December 2022 to the last report, the debt's down a little bit. But nonetheless, remember this number, $3.6 billion of total debt. Okay, going over to the cash flow. If we go down to the levered free cash flow here, in the trailing 12 months and even the last couple of years, 2022 and 2021, their free cash flow is negative. So if you guys remember that debt to free cash flow number that we saw a moment ago that was negative 60 something, that's because of this right here, negative free cash flow. So free cash flow is what this company would use to pay down debt. And it looks like the years prior they were doing okay. Okay, 591, 218 million, negative 89 million positive here. So the free cash flow is all over the place, not coming in reliably, not growing reliably either. So it's going to be hard for them to service all of this debt and pay down this debt if they're not even positive in terms of free cash flow. And even so, just looking at net income, only $40 million in the trailing 12 months, only $136 billion, $137 billion, or million dollars, excuse me, in 2022 compared to, $3.6 billion of debt that's increasing. That would take a long time to pay off all this debt if they had to. If they were really in a pinch, they'd be in a bad spot. They are financially vulnerable. So this is one that really stuck out to me. Let me go back and look at my notes real quick. Well, hang tight with me, guys. Oh, and then one other thing, just kind of on this note, being financially vulnerable, it's gotten to the point where it's so bad, and I know some of you guys already are familiar with this news, but earlier this month they actually cut the dividend. They cut the dividend by 80%. So, case in point, I suppose, this company has been pretty financially vulnerable to the point where they aren't able to continue to reward shareholders. They have to cut the dividend or reduce the dividend in order to keep their head above water financially. So that's something you don't want to see. But that was one example to me that that jumped out as a business that, and I don't want to call it awful, but one that was the complete opposite of something like an Apple or a Visa, a MasterCard, a Williams Sonoma, stuff like that. So let me go through, look at these comments before we move on. Okay. Okay, I didn't really miss too much. AAP is another mediocre. Yeah, okay. You guys are talking a little bit about CWH there. So, hopefully that helps, guys. Hopefully that helps kind of, and this is just to remember too, like this is not the end all be all. There is so much more that goes into researching these businesses than and defining a good or a bad business than this right here, or these metrics right here. So do remember that it's not the end all be all, but it is kind of a quick thing that you can look at. But with that, guys, one more question for you. I know I've asked you a few questions so far. So right here. So in thinking about all this stuff, what are some other qualities? We looked at cash, debt, those sort of things. What are some other qualities that can help determine whether you're looking at an awesome or an awful business? What are some things that you guys look at? If you're looking for a good company, an awesome company, a great company, what are some of the non-negotiables that you want to see? And on the inverse of that, what are some qualities that you notice that turn you off from a business outside of debt? Okay, because we did talk about that. But what are some other things that you look at? Let me know that in the live chat or in the comments below if you're watching the replay. I'm curious to get inside your guys' minds, see what are the things you look at when you research stocks. So. Oh, Dan, thank you, man. Yeah, good catch on Ford. You have no idea how many Tesla shills F up the debt point. Yeah, no, it's an important thing because the debt they have just operationally on the manufacturing side is different than what they have for financing. You look at that just at surface level for Ford, and it's like, geez, that's a pretty overwhelming amount. But they're making money on that because they're loaning it out for interest, so it's serving a purpose. Let's see here. Okay, so growth potential is something Zal looks at. Innovation, okay. Dean, insane yield, yeah. A lot of people just look for that and stop right there. So, D Media says dividend pay history in growth, certainly. Although I will say, that is a good thing to look for. Although I will say, when I was first getting started, that was pretty much like when I was looking at 3M, which I just sold out of. That was like, I just looked at, and once again, none of these are the end all be all. You got to take all these different things and compare and contrast. But when I was looking at 3M, I was like, okay, Dividend King, 60 plus years of growth. They make Scotch tape. They make Post-it notes. I'm good. So a lot of people will just stop right there. They'll stop at the yield, or they'll stop and see it's a Dividend King, so it must be good. If you're a beginner investor or someone who's just learning how to do stock research, and this is your train of thought, please take it from me who's thought that way and has had to learn the hard way. There's more to looking at these individual stocks besides just their dividend growth history. But D, that is a good thing to look for. That is an important thing. Growing the dividend, kind of like D was saying. Adam, growth and innovation, like Mountain High and Zal were saying. Let's see, low payout ratio for Rick here. I think that's a good one. Low earnings payout ratio, which is the number that you'll see on the Seeking Alpha Dividend scorecard. It helps as well to look at the free cash flow payout ratio. And how I do that, just so you guys know, just if I'm looking for a quick, let me go here. Let me go to Williams Sonoma, for example. Just a quick way to kind of gauge it. So go to the financials tab on Seeking Alpha, go to the cash flow statement, scroll all the way down. You can see right here is where it'll show the common dividends paid, okay? So in the trailing 12 months, Williams Sonoma paid $217 million out in dividends. But as far as free cash flow goes, they brought in $783 million. So this dividend is well covered by the free cash flow. 217 into 783, that's somewhere between a 35 and 40% free cash flow payout ratio. So that is good to see. Hopefully my math is right on there. I think I'm pretty close. 35, 40%, not too shabby. So anyway, just that if you're looking for a quick reference or a quick way to look at it, that's how you can do it. Gosh, I am stuttering like something else tonight. Let's see here. Buybacks. Jarian says buybacks. SBC that doesn't, share buy SBC that doesn't eat into the cash flow. What's SBC? Kyle says payout ratio. How they use debt for leverage is something to look at. Okay. Oh, Pizza says, what watch you got there, Mr. Williams? Would love to have it. I will show you, man. This is, I just got this for my birthday. My mom got it for me. This, and I've been getting really into to watches lately. I have a couple of them. So this is it's not an expensive one by any means. It's a Seiko 5. I don't think it'll focus if I do it here. Yeah, you can kind of see it. Seiko 5. It's like less than $200, but it's kind of supposed to be like a Seiko's version of the day date. So I love it. I can't stop looking at this thing. Let's see. And it was just from Amazon as well, by the way. Willie says dividend history. Daniel, share buybacks. Rick, I hate to see debt. I got to say, I mean, it's you'll see debt more often than you will see debt-free companies, but you just have to, like, there's a line between where the debt's serviceable and where it's not. What we saw with Camping World is not great. What you would see, though, with Apple, if we go look at Apple, just real quick, and I want to touch more on what Rick was saying, too, because I kind of, lately I've been sharing the same sentiment. So going to Apple's balance sheet, remember, guys, they have some debt. If we go to their total debt, $109 billion. Total debt. I mean, cash, negative net debt, negative $57 billion, so they're fine. But looking at the total debt, $109 billion, you can go back over to the free cash flow, or the cash flow statement, look at the free cash flow. So every single year, just in the last 12 months, they brought in $90 billion of free cash flow, almost $91 billion. So $91 billion into where was the debt? $109 billion. They could pay off the great majority of their debt in 1 year with all of their free cash flow if they really needed to. So their debt situation, $110 billion, they've got it, but totally serviceable, totally fine. But I'm kind of with you, Rick. Like, when I've been looking at companies lately, there's a really good feeling that comes with it, with having a company that has just no debt, none that you have to worry about. And so when I've been researching companies, something I've kind of been looking for is do they have no debt on the balance sheet? Do they have negative net debt? If so, it's like that's like an extra few points in my book, just because it feels good to own companies like that. So, Jim, this is good. More qualitative. Longevity and relevance, having a product or service that the public wants or needs. Yeah, Julius Caesar, this is a good point too. Quality of management team, how they allocate capital. I want to ask you guys too, on this note, how do you judge, and Kevin Burgess is someone who does this really well. I like to hear him talk about this. When you guys look at the management team, how do you judge the quality of the team? What are the things that you look at to determine whether they are a high quality management team doing the right thing or they're shysters? What do you guys look at there? Let's see. Christian here says the dividend growth CAGR, growing free cash flow, growing revenues, low debt, low payout ratios, good management. That's a lot of what you need in the nutshell right there. Mountain High, buying back cheap shares for sure. Adam looks for brand, definitely. Yeah, Dan says I look for Zal approved before I buy a stock. Very true. Tommy looking at management. Dominique growing free cash flow, performance in a down market. Dividend growth and payout ratio according to Pat. Okay, dividend history. This is actually an underrated one too. This is one that, based on a lot of our recent experience, I think we should be more mindful of. Possible lawsuits in the future like J&J and 3M specifically, or especially in the pharmaceutical industry. And it's hard to, you can't predict the future. You can't really know if a company is going to have a lawsuit someday or not. Unfortunately, like in this day and age, a lot of these really big mature businesses like Johnson & Johnson, like 3M, guilt or innocence aside, like they have huge targets on their back as it is, so they may have a higher amount of litigation risk. So definitely something to consider. Sir Dude Bro Man says crazy dividend growth for a loco. Time span, yeah, absolutely. Dan, I'm surprised no one had said this. No one said this sooner. Return on invested capital. That is yeah, definitely a good thing to look for. So, um, let's see. Let's keep going. Okay, so in terms of management, I think Anthony says transparency and follow through. Okay. And Boogie World, right off the subject, but what company does your live stream? So I use a website called StreamYard to do my live stream, and I'd highly recommend it. It's a very easy platform to use, very clean. You'll see a lot of YouTubers who do live streams as well. They use StreamYard also, but it's been very good. I've had no issues with it. I've only had a great experience using StreamYard, so I'd recommend it for anyone who wants to get into live streaming. Let's see. Oh, okay. SBC is share-based compensation. Okay. Hot Dog Jones says Seikos are great watches. Yeah, yeah, they're underrated, and that's the thing too. You know, just because a watch might be cheap doesn't mean it's bad. There's a lot of high quality watches. There's a lot of high quality watch brands that are not the ones that we're all familiar with, like the Rolex, Omega, Cartier, Breitling, Tag. These are some of the more popular ones. What am I missing? Tudor. Yeah, ones like those. Grand Seiko. Ooh, man. I'd love to get myself a Grand Seiko someday. Let's see. Yeah, like Zal said, like, subscribe, join the Discord. Guys, you should 100%, if you're going to do anything, like, if you're, like, looking at those three things and, you know, like, you know what? I'm not going to do all that's a lot of heavy lifting. Liking the video, subscribing to the channel, joining the Discord. Come on, forget about it. I'll do one, Ryan, okay? Ryan and Zal, I'll make you a deal. I'll do one. If I had my druthers and I had to pick just one of those things for you to do, it would be joining the Discord. You guys, one of the best investing communities out there. I mean, just everyone here in this stream and that comes to this channel are some of the tippy top in the investing community. The upper echelon of investors. I'm just kidding. But really, joining the Discord, you guys won't regret it. It's free to join. A lot of great conversation going on in there. A lot of investors helping investors. 24/7 stock talk, 24/7 portfolio sharing, dividend income updates. Just a lot of great conversation. It's a really tight-knit community. And at this point in time, we have over 2,300 investors in the Discord group. We're actually coming pretty close to 2,400. And once again, the Discord's free to join. The link to do so is in the description of this video. So I hope you guys do. And if you join the Discord, shoot me a message, tag me in a text or something on there, say what's up, and I'll love to chat with you guys there. So let's see here. Let's keep going. Okay, I'm reading. Okay, D probably already left, but D, have a good night. We'll see you next week. Thank you for tuning in. Jones, Hot Dog Jones says, check out the Citizen ProMaster dive watches. Okay. You know, I honestly haven't found a dive watch that I really like. So this is I think it's a 34 millimeter case. And I really like this size. Like, I see ones that are like 40, 42. And even that seems a little bit big for my wrist. So I don't know. I'm really liking this. But it kind of limits you. When you only go for cases this small, it kind of limits you to certain things. But yeah, dive watch is on my list. Citizen, I know, makes good watches. Tissot or Tissot, I don't know how you pronounce it. But I've been looking at some of those as well. They have some good ones there. And then Omega, I like those a lot too. Like the Seamaster, the Aquaterras. There's a lot of nice Omegas that I like as well. There's one actually, never mind. Let's keep going. G-Shock, yeah. G-Shock, Garmin. Oh, that's cool. Treated myself to an MGM watch when I got back from my so you know what's interesting? I was reading, I don't know if you guys see, there's another book over there that I was reading, and I read the word Iraq, whatever, and I thought, okay, is it Iraq or is it Iraq? Which one is it? How do you pronounce it? Josh says you will own a gold Rolex one day. Yeah. Nice. Thanks, Josh. Caleb says, Ryan, how do you feel about JEPI? JP Morgan is the biggest bank out there. Do you feel like it's a dividend trap? Oh gosh. This is a good question. So I have some JEPI in my portfolio. It's not a huge position at all. Um, and I bought it maybe a year or so ago now. And I have mixed feelings on JEPI. I mean, first and foremost, and I talk about JEPI in a handful of videos. Like I made one that's talking about SCHD plus JEPI being a good combo, and I do think it is. I don't think it's a bad one. But here's the thing with JEPI. I personally don't think that you should have a large portion of your income coming from JEPI. I know it's easy to do because it has such a high yield, but I don't think you should have, if you're going to invest in it, I don't think you need to have a high percentage of your income in JEPI, or I don't think you should, rather. For a couple of reasons. Number one, it's only been around for a few years, so the long-term performance of the fund is still TBD. And I don't think this will be the case forever, but so far just this year we've seen the monthly distributions diminish quite significantly. So like, for example, in my portfolio, I think I started the year in December, January, my payment was $11, $12, $13 in there for the month, somewhere in that range. And I think my last payment was like $6.45, so it's gone down quite a bit. And, if you're someone in retirement or someone investing for income, you don't want that to happen. And they pay a variable dividend that goes up and down. And sure, it's come down now. It could just as well go back up, and I hope it does. It's certainly possible that happens. But nonetheless, something like that where it does go up and down and there's no telling what it's going to do. And I just wouldn't make that a huge percentage of your, I wouldn't want a lot of your income coming from that can have swings every single month. That's kind of the biggest thing. But I like JEPI. I like having that monthly income. Like I said, I don't keep a large allocation of it, so it doesn't really bother me that it goes down too much. I just kind of was investing in it to try it out, to see how it works, just kind of a little income boost. And I don't even see it as a permanent position either. I see it at some point I'll likely sell out of it. I certainly don't plan to ever buy any more shares, but anyway, but as far as the covered call ETFs in general, if you were going to line them all up, JEPI, JEPQ, QYLD, XYLD, RYLD, even throw the yield max ETFs in there, those ETFs, I would say that JEPI stands out as one of the more premier. So if you are going to invest in one, I think JEPI is right up there with one of the better ones. So that's my take on it. Let's see. Oh, nice. A Tag Herrera. That's a pretty iconic watch. Steve McQueen used to wear, what was it? Tag Monaco. I love Steve McQueen. He's like one of my heroes, one of my biggest inspirations, but don't like the Monacos, I gotta say. Let's see here. Let's keep going. So Journeyman, thoughts on MPW? Yeah, this is a good question. So okay, so I'll be honest. I really haven't, the last handful of months, I have not even thought about MPW. I haven't looked at it, haven't researched it at all. I really have not looked at MPW, so I'm not the best person to comment on the situation. As far as what's going on today, the news that came out today, and I'm still trying to just understand it. Let me just remember what happened. I'm actually going to pull it up. So if we go back over here. So one of some regulator here in California put the whole prospect thing on hold. Okay, and I do believe, if I'm remembering correctly, the company said either MPW or Prospect said it's kind of no big deal because they were expecting something like that to happen. But I think why a lot of investors were peeved by that is because they did not mention that in their quarterly earnings. So it seemed like they were kind of just being shady and withholding information, which is not something you want to do to your shareholders. So I understand that frustration. I certainly do. And I was talking to Russ Harris and I were kind of talking about this earlier today, I think. And actually, Russ had a really good point. I think he's kept up on it. I'll read it to you guys. He's kept up on this more than I have. So let me find it. So Russ said, because Harris asked what we thought of it or whatever. Russ says, I'm not surprised at all about the drop, the huge share price drop. I looked into it on two occasions with the latest being last Sunday, and my conclusion was management was incompetent, malfeasant, or both. Looked to me like they had been overpaying tenants in sale leaseback deals to make sure they had enough cash to pay their rent. And Russ, I hope you don't mind me sharing this. And when they couldn't pay, they invested in equity stakes in their tenants. So basically, when Prospect couldn't pay its rent, MPW said, well, we'll just take, an equity stake in your position in lieu of the unpaid rent. And the cherry on top was when a tenant couldn't pay rent, they instead sold MPW a portion of their business, and then MPW claimed that as cash flow for the quarter. So after a while, Russ said, I was like, this business is a mess. So, like I said, I wanted to share that because I didn't really have any thoughts on it just because I haven't really kept up with the company, but none of that sounds good. And, a few months ago, I put out a couple shorts talking about MPW. One of them was this was actually back in January. So quite a while ago, over 6 months ago, I put out a short that was three reasons to buy MPW right now. And I don't even remember what I said. I was looking at the company a lot more then, but the situation has developed quite a bit more since then. So, overall thoughts on MPW, I'm not really sure. It sounds to me like it's gotten to become a lot more trouble than it's worth. But at the same time, with the risk of the company, the share price is lower than it's ever been. So there could be some value there. There could be some, one man's trash, as they say. There could be that, and it just depends. It just depends what you think of the situation. So, but speaking personally, it's not one that I'll keep up on. Like I said, I really haven't thought about MPW, looked at it in a long time, read any articles on it or anything. I was just so inundated with the news today that I couldn't avoid it. I couldn't help at least hearing a little bit about what was going on. So, okay, real quick, I'm just reading Jim's comment about Iraq. Okay, that's how you pronounce it. Good to know. Good to know. Thank you guys. Sorry. But so that's my take on MPW. I don't really have any serious thoughts on it at this point. So yeah, and it's not one I don't know. I can't think of any. It'd be a good video to make just to get views. But truth be told, I just don't really know. I don't really know that I have any interest in making videos about MPW. Yeah, just not really interested in it. It'd be, like I said, it'd be a good one for views, but I don't want to do it just for that. Let's see. Let's keep going. And just so you guys know, too, we've got maybe about 10 minutes left in the stream. It's 5:53 right now. We usually wrap it up about 6, but you guys know me. I've got some. I tend to go a little bit long, so maybe I'm a bit long-winded, so maybe we'll, go a couple extra minutes. We'll see. Probably won't end it right at 6, but let's see. I see some comments about a Target right here, and it's kind of interesting. So Target and Walmart are two companies that often get compared to one another. But there's a big difference between the two. So the primary difference between something like Walmart and Target, not something like, the primary difference between Walmart and Target is that something like, I think 50 or over 50% of Walmart's sales come from groceries. Okay. So, and people are, no matter what the economy's doing, people have to eat. So people are buying groceries, and sometimes they might want to go where it's cheapest, and that's going to be Walmart. That's actually certainly the case for me. I live right around the corner from a Walmart, and it's actually a really nice Walmart. Definitely nicer in Vegas than the Walmart that I had in Sacramento, or even in my hometown in Yuba City, California. So definitely don't mind going to Walmart. But then Target, on the other hand, only about 20%, 20 or 30, I think it was 20% of their sales come from groceries. The other 80% is coming from things that are more discretionary, like the patio furniture, which is something they had a huge pile up of, a huge amount of inventory of, I think earlier this year. It was either earlier this year or later last year that they had to basically run a huge promo to get rid of. So that definitely cut into their margins. So anyway, long story short, Walmart is a bit more stable, a bit more stable because of the majority of their sales come from a staple, groceries. Whereas Target is their sales might be more, I don't want to say at risk, but their sales might fluctuate a bit more depending on what the economy is doing because their sales are more discretionary. Clothes, beauty products, patio furniture, outdoor furniture, like I was saying. So that's the big difference between Target and Walmart. And we've actually seen that in their most recent earnings, I believe. Walmart beat on both the top and bottom line, and I might not get all of this 100% right, but in general, Walmart put up really good numbers. Target, not so good numbers, and a lot of that had to do with where they derive their sales from. But nonetheless, I mean, both are really iconic companies. Target's a dividend king, high growth dividend king at that. As far as dividend stats, I will give Target the advantage because they have the higher yield. I think Walmart's dividend growth history is still pretty solid. I don't think they're quite a king. I could be wrong, but I think they're pretty dang close. But Walmart's got like a 1% yield, not the highest growth rate. And then Target's yield is considerably higher, a lot higher dividend growth rate, and they're a dividend king. So the dividend advantage goes to Target. So some random thoughts on that. I've hardly touched this, guys. I'm just catching up on the comments now, seeing what I missed here. So I'm only a couple minutes behind. It's not too bad. Yeah, so I actually want to touch on this too, Lua. I have 300 shares of TSLY2, waiting for a good time to get out and consolidate into better stocks. So I don't know what to say really about TSLY. I made another video on that one a while back. The title was like, "Is TSLY a scam?" And this was a couple months after that came onto the market. And there's no denying that the yield on that fund is incredible. Let's actually go look at it, guys. Actually, that might be better. Just paint a better picture. So there's no denying that TSLY, this Yield Max ETF, which writes synthetic covered calls on Tesla stock, has an incredible yield, near 50% in the trailing 12 months. And they haven't even been around for a year. I think they've been around since January, okay? If we look at the dividend history, started off, at $1 per share in January. That was the first dividend. Went steadily down pretty steadily for the next few months until May. 44 cents per share. So from $1 down to 44 cents per share. And right about here is where I made my video. So as soon as I made my video talking about TSLY potentially being a scam, which I didn't really. I just said, kind of like JEPI, like the other covered call ETFs, it pays a variable dividend, and the dividend's going to fluctuate, and you need to consider that beyond the extremely high yield. I mean, when you see a yield that high, 50%, it should at least a little bit raise some sort of red flags, right? So as soon as I put out this video just showing that it went down and in dividend distributions over the months, what does it do? It just starts to go back up. And I started getting comments like, this aged well, you're crazy. Like, it's not going to the moon, but like a lot of people being like, yeah, what happened, Ryan? You said it was going down and now it's back up over, and now it has its highest distribution in July. But what's it doing again? It's going back down to 83. Maybe it'll go back down even lower than 44 next month. Who knows what's going to happen? But the same principle holds true as with JEPI, what I was saying. I think it's okay to dabble if you want to try it out, but I would not put all of your eggs in that basket. I know the yield's tempting. I know it's tempting. It's just not a good long-term strategy, in my opinion. Especially you especially shouldn't put all your eggs in that basket because the fund's only been around for a few months. Who knows what's going to happen with it? Yeah, like I said, it's okay to dabble, I think. Try it out. Maybe it's fun. So let's just kind of like throw in 20 on black, see what happens. Maybe you W money, maybe you lose it. But please do not make that a huge portion of your investing strategy. So let's see. Yeah, talking about the yield max stuff, too good to be true. So Ben here says he poses actually an interesting question. We're gonna make this like one of the last ones of the night for sure. So what's the point of big dividends if your principal is going down? And this is a question that I kind of see asked a lot. Is like, what's the point? Well, pretty much that. It's exactly what you said. What's the point of getting these big dividends if it's eroding the share price, if the share price just keeps going down? And kind of like Zal says here, if the total return is still good, it can be a reasonable investment temporarily. If the total return overall is positive and heading in the direction you want, then that's probably what you should focus on. But at the same time, if the loss in share price is outpacing the returns you're getting from dividends, then it's something you need to seriously consider being invested in. And I actually think they talk about this a little bit in the Income Factory. In this book right here, I think they talk about this a little bit. And the author, I haven't read it for a while, so I might be mistaken, but I think the author says something like, it doesn't matter if the share price goes down. And we kind of talk about this a little bit too on the channel, and other dividend investors do as well. We'll break this down. But the author of this book essentially says it doesn't matter if the share price goes down because you're not investing for the share price returns. In fact, for what you're doing, if you're building an income factory, the share price returns are irrelevant. It's all about the income. And actually, it's good when the share price goes down because then it makes it easier if you're reinvesting some of those dividends or distributions. You can buy even more because they're cheaper and the yield is increased. But at the same time, if that's just the constant trend where share price continues to go down, then I just don't see that as a good thing overall. And we talk about that too. Like I said, a lot of dividend investors do talk about that, and I'm certainly guilty of that as well. But within reason, you don't want that to be the perpetual cycle. Overall, ideally with your investments, you want to see both happening. You want to see the dividend increasing, the yield, whatever, but you want to see the dividend payment per share increasing. You want to see it go from $1 per share to $1.20 per share to $1.50 per share to $2 per share eventually. You want to see that payment per share going up over time and your yield on cost increasing. If a company is able to sustain that, actually, let me rephrase that. Only a company that's able to do that and do it sustainably. Okay. The only company that can do that and do it sustainably is a company that has strong underlying financials, unless they're taking on tons of debt to finance the growth of the dividend. But you would catch that in your due diligence, guys. But theoretically, only a financially sound and financially growing company is going to be one that is able to continue growing the dividend over a long period of time. And those are the kind of companies you want to be invested in. If the dividend's growing, this isn't always true, but if the dividend's growing, and the dividend growth comes as a result of earnings growth or free cash flow growth, which comes as a result of earnings growth, then in theory, that should be raising the share price as well. So in theory, it's like if you invest in dividend growth stocks, good dividend growth stocks, over time, not only will you benefit from increased income and increased yield on cost, but you also should see share price appreciation with that as well. That's what you want to look for overall. Anyway, sorry for the tangent. Let's see here. It's true, but Ryan, not all of the stock keeps going down. I know, man. We can use yield max to pick up good stocks without using your cap. Be my guest, my friend. Like I'm not judging you for investing in it at all. Do your thing. So do whatever you think is best. Oh, nice. A little Jay-Z. Love to see it. With the top down screaming out, money ain't a thing. Andrew says here, second week with you. Really enjoyed the content and your prep. You're producing high quality stuff, and you should be proud. Thank you, my friend. I really appreciate the kind words. I'm trying. I love doing this. I really love doing I really love doing this live stream. I love doing the Dividend Happy Hour. I was thinking earlier today, sometime soon. I don't think any of you guys watching right now are in Las Vegas, but I want to put something out there and start getting a collection of gathering a collection of people who are in Vegas, investors who are in Vegas. I want to start doing in-person Dividend Happy Hours. I want to start doing that once a month, where anyone who's in Vegas who's an investor can come to see or can come to the in-person Dividend Happy Hour. I think that'd be a lot of fun. So that's something that I'd like to do. I don't know. Maybe I'll get around to doing one by the end of the year. But if not, I'd like to have the first in-person Dividend Happy Hour next year here in Las Vegas. So any investors who are in Vegas, please let me know. Please like send me an email, leave me a comment or something, because I want to start building a Rolodex of people who live here and start getting together in person and doing this stuff. So I think that'd be really fun. Cole here asks, how often do you do these live streams? Every single week, man. I do them every Friday night starting at 5 p.m. Pacific time, so 8 p.m. Eastern time, depending on what time zone you're in. But I do them every Friday night, unless I'm sick or on vacation or betrothed in some other way. But yeah, I do it more or less every single night. I don't often miss live streams. I don't often cancel them or whatever. So you can pretty much expect this every Friday night. So Ant says, I didn't expect you to know about Gangstar. Dude, I love Gangstar. Ayo, I'm gonna be on TikTok. That's all my eyes can see. Victory is mine. Yeah, surprisingly. Love Gangstar. Yeah. Let's see. Come to Nashville. Come to Washington. Mountain High says he'll come to Vegas. Yeah. Joseph says I need to have Zal on the show. I'd love to have Zal on the show. If he's open to it, I will. Zal, if you're open to it, I'll have you on the Dividend Happy Hour, man. If you are open to it, I'd love to do that. So, let's see. Okay, Christian's here in Vegas. Yeah, great, man. So, that's great, Christian. That's good to know. So, 1, 2, 3. I think I know 3 or 4 people who live in Vegas. And if I can get like a group of 10 to 20 investors here in town, I'd love to start doing like monthly Dividend Happy Hours and start building a local community around that here in Vegas. And you know, Christian, as a local, you know we've got so many great places to do happy hours here. So, yeah, man, that's awesome. So I'll keep you in mind for sure as I build this out. Rolodex, okay, Boomer, I know. Okay. Kama says, I'm in Phoenix with enough lead time. I'd love to come chat and hang out with an in-person happy hour. Yeah. You know, ideally, and I don't have any concrete plans to start this like super duper soon. I'm just kind of like putting the idea out there, just kind of starting to put it out into the ether. But slowly over time, this will happen at some point. I know that. I just don't know when. And when it does, I'll certainly give notice. Like I'd love to do it, put it out there like a month in advance. That's kind of my goal, at least a month in advance. So, German, planning to go to Vegas in September. Are you up for a dinner? Yeah, I'd love to get together. Feel free to shoot me an email. You can message me on Discord. I don't have my email. My email's on my channel. If you go to the About section on my channel, it'll show my email. But you can shoot me a message on Discord, whatever. You can get in touch with me however, but that'd be cool. That'd be awesome. Let's see. Come to Orlando. Yeah. So, guys, you know, if we're doing these in person, okay, I got to go in a minute. But you know what I'm saying? I always do this. Okay, here's the master plan. These in-person Dividend Happy Hours they've got to be here in Vegas because that's just where I am. But if they go well and, you know, we got a good system going that's repeatable, you know, maybe we start taking on, I don't know what you'd call them, what the word for it would be, ambassadors or other people in other towns like Orlando or Nashville or Seattle or whatever to start planning their own in-person Dividend Happy Hours. And we make this like a nationwide thing, but it'll start here in Vegas for sure, but I think it could expand beyond that. I definitely think it could. So, Pat, Ryan, Russ, and Kevin need to do a live happy weekend. So Russ is coming to Vegas Russ is coming to Vegas. We're still planning when, but he'll be coming to Vegas maybe sometime early next year, and we're gonna get together. And I'm gonna film the whole thing too. Like I'm gonna make a whole video around it and just show what all the debauchery. So Dean says, I missed you in Vegas in April. We'll make it happen next year. Yeah, if any of you guys ever come to town, please shoot me an email. Get in touch with me. I'd love to meet up if the opportunity presents itself. So I'm extremely grateful for you guys for all your support. So if I have the chance to ever see you in person or thank you in person, I'd love the chance to do so. So yeah, Shamir says Chipotle's getting cold. I know. I do got to go. Yeah, and whenever I come to New York, I'd love that, man. Never been to New York City, but I'd love to do it. Let's see. Vegas trip and sit bowling team. Yeah, man. Definitely. Let's see. Thank you guys. I'm just reading some nice comments, but thank you guys all so much for the kind words and for the support. Yeah, Christian, we'll hit up all the Vici properties. That'd be awesome. So anyway, guys, we're gonna wrap it up here. We should make our dividend hour. We're gonna wrap it up here, but tonight was really fun. I hope you guys enjoyed tonight's live stream. I really appreciate you tuning in and hanging out with me this last hour. I don't want it to end. That's the problem with this. I love doing these, but it's got to end sometime. So once again, thank you guys all so much for the support. In-person dividend happy hours. I'm gonna keep thinking on the idea. Maybe we'll talk about it some more next week because I just love the idea. Gets me really excited. So please do what Zal says here. Come to the Discord and let's chat. Maybe we'll pick up the conversation there. You guys seriously join the Discord. Seriously join the Discord. Do it. Anyway, you guys have a fantastic night, fantastic weekend. Please stay out of trouble. Okay, Jack, no TPing, no egging, no TPing, egging. What else do people do? Those are the big ones, you know. Stay out of trouble, man. But you guys have a good weekend. And Sunday's video, you got to watch it. You guys have a good night. I'll see you in the next one.